Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023, and that stock is ConocoPhillips. And we can see over the last year, ConocoPhillips is down 13%, while the rest of the market is up around 3%. So they're underperforming the market over the last 12 months. But in this video, I'm going to look into some of the recent news that came out surrounding ConocoPhillips. I'm going to look at their financial statements, and then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Conoco so we can know if this is a good price to buy into the stock at a value investing perspective. So for starters right here, this is just a quick little article that points out some of the key moves that ConocoPhillips has been making recently to grow their business. It's titled ConocoPhillips to buy rest of Canada's Surmont oil site, bumping Suncor, I think that's pronounced. And right here, they talk about how Conoco is basically buying the other 50% stake in Surmont oil facility, which is held by Total Energies. And they're going to buy it for about $3 billion, which is giving them full ownership, getting rid of their rival Suncor Energy, who also wanted to buy Surmont oil facility. And basically this little facility holds one of the largest crude reserves in the world, and obviously if you're able to get that oil out of the ground, that's going to produce a lot of cash for your business. They actually touch on right here, they expect that it's going to add about $600 million of annual free cash flow in 2024. The deal is expected to close in the second half of 2023, and it'll be funded mainly through short or medium term financing or a combination of both. So that's just a little quick article. I know usually the articles are a bit longer, but this one is just a quick little news flash about ConocoPhillips. And right here, these are their financial statements. I'm going to look at their income statement, balance sheet, and cash flow statement to get a better understanding of their financial health. Right here, we can see that for the first 3 months of 2023 compared to 2022, their revenue is down from $19.2 billion to $15.5 billion. And then if I scroll down here, we can see that their bottom line net income is also down from $5.7 billion to $2.9 billion. So one of the trends we've been seeing with a couple of the other oil companies we've been looking at, like Chevron and ExxonMobil, is that their revenue has been decreasing. But for those two oil companies, even though their revenues declined, their net income increased. Whereas with ConocoPhillips, their revenues declined and their net income decreased. So that obviously puts them at a little bit of a disadvantage compared to their competitors. Then right here, this is their balance sheet comparing December 31st to March 31st. Total assets are down from $93 billion to $91 billion. And then we can see most of their business is financed by equity compared to liabilities. They have $47 billion in total equity and $43 billion in liabilities. And of this total equity, they have around $54 billion of retained earnings, up from $53 billion from December. So they do have more cash to redistribute to shareholders if they want to. And then lastly right here, this is their cash flow statement. We can see that for the first 3 months of 2023, they've had operating cash flow of $5.4 billion, up from $5 billion. And then we can also see that they repurchased about $1.7 billion of common stock, up from $1.4 billion the year before. And they also paid out around $1.4 billion of dividends. So in total, they returned about $3.1 billion worth of cash back to shareholders through stock repurchases and through dividends. And that's probably one of the main reasons why their stock price has sort of stayed relatively steady, even though the energy industry at the moment, their stock prices have been, not their stock prices, the oil prices have been falling. And so, the energy industry is a little bit cyclical. So as oil prices increase, the stock increases. As oil prices decrease, the stock decreases. But paying out dividends and repurchasing shares of common stock is definitely a good way for ConocoPhillips to try to return value back to shareholders in an economic downturn. And so right here, this is a discounted cash flow model to figure out the intrinsic value per share for Conoco. Yahoo Finance estimated that Conoco was going to decline in growth rate at negative 10% for the next 5 years. They had around $18 billion of free cash flow in their most recent full year, 2022. They had around $8 billion of debt sitting on their balance sheets after subtracting cash, and about 1.2 billion shares outstanding. So when you take these metrics into account, the estimated intrinsic value per share comes out to be $90 per share, which means that at the current share price, they're currently trading above their estimated intrinsic value per share at around $100 per share. So based on these estimates, they would not be presenting a good buying opportunity at the moment. Then on the right hand side here, I compare them to two of their competitors, Chevron and ExxonMobil. We can see that across the board, ConocoPhillips has the best profit margins across these three companies, Chevron and ExxonMobil. They have the highest gross profit margin at 37%, highest net profit margin at 23%, and the highest return on assets at 20%. They also have around a middling of the pack PE ratio of 8 times earnings, and they're also paying the lowest dividend. Every $100 you invest in the ConocoPhillips, you're getting paid about $1.60, whereas with ExxonMobil, you're getting paid about $3.22 for every $100 that you invest into Exxon. So from a financial ratio perspective, if you were judging these companies based off of profitability, you'd want to give it to ConocoPhillips, but based on dividend, you'd probably want to give it to ExxonMobil. And so to end off the video, I wanted to compare ConocoPhillips to some of the other companies we've looked at from past videos. We can see right here in terms of the intrinsic value table here, Google, GE, and Etsy are the only three companies we've looked at recently that are trading below intrinsic value. ConocoPhillips is trading at 1.13 times their intrinsic value per share of $90 per share, and that is good enough to get them onto the 5th place spot on our table. In terms of growth rate, we saw that ConocoPhillips had a negative 10% growth rate, so that's not good enough to get them onto this table. Chipotle holds the number 1 spot for estimated growth rate at 26%. For gross profitability and net profitability, we saw ConocoPhillips had gross profit of around 37%, not good enough to get them onto the gross profit table. Adobe holds the number 1 spot at 89% for that. But for net profit, they did have a net profit margin of 23%, which puts them in the 5th place spot. Microsoft holds the top net profit margin at 36% so far from what we've seen. And lastly, to end off the video, I wanted to look at stock performance over the last 5 years. ConocoPhillips over the last 5 years has had a stock performance of 48%. Keep in mind, ConocoPhillips is a dividend-paying stock, so this return over the last 5 years is not taking into account the company's dividend. It's only taking into account the increase in their share price. But obviously that's all I'm taking into account for this table, and the 48% return over the last 5 years is not good enough to get them onto the table here. Tesla holds the number 1 spot at 1,000% over the last 5 years. So based on this, it would seem that ConocoPhillips is relatively competitive in terms of profit margins and also in terms of intrinsic value, but for growth rates and stock performance, not so much. They're also very competitive in their industry, as we saw right here, and they're currently not trading below intrinsic value per share based on the discounted cash flow model. So let me know in the comment section down below what you guys think of ConocoPhillips. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.